Good morning, everyone, on Monday, the 18th of November, as we head towards another week of trading. Pretty quiet week this week. We've had a few busy weeks of the last couple of weeks with obviously presidential elections in the US, a lot of high impact economic data across the US, and we're kind of through that now. And I think we can kind of settle things down a bit and think about what is due to come going forward. And my opinion hasn't changed really. I mean, I've been banging on about the same thing since Trump got elected, and yeah, my opinion doesn't change. It's just, in fact, last week, I mean, the interesting thing last week was how strongly stocks sold off. Right, we were in the midst of all that economic data. Right, and some things have come out with the Fed, and the Fed seemingly reluctant to go and cut interest rates, or sort of came across as if they're reluctant to continue to cut interest rates, but they do still want to cut interest rates. They will want to cut interest rates, and I think that's ultimately still where they will head. So like Donald Trump's still positive for business, certainly positive for homegrown business. Whether he's positive for business around the world is a different question, but certainly throughout the US, likely to be positive for business. And the Fed, I can say what they want, but they are still likely to cut interest rates. I can't imagine they've been so hell bent on cutting interest rates, the Fed. I can't imagine Donald Trump comes in and now they're just going to drop that. They do want to get interest rates lower. Maybe they just want to say they don't really want to due to the fact they think that what Donald Trump's going to do may be inflationary, but I still do think they'll lower interest rates. And yeah, we kind of had a bit of pricing out of interest rate cuts back in the last week. If I just get this Fed Watch tool up. Give it a minute to load. I probably should have had this loaded before I started recording, but anyways, yeah, 18th of December. It's now a 50-50, or basically a 50-50 chance of whether we get a cut or not. So this was up, like, it was kind of, it's been like 60-40 flip flopping between kind of 60-40, where you can see 41% chance of it being where it currently is, still a 60% chance of us getting another cut in December. And I think that will probably rise. I think that will cut still in September. So um again, we'll have to see how that pans out with the economic data over the coming 30 days. But still, they want to cut interest rates. The Fed, I don't think the Fed have enough of a backbone to, to sit there and just not cut in December. I'd be pretty surprised if they did, due to what they've done over the last kind of few years. They've kind of just done what the markets have told them, really, for them to actually stand up and be like, no, we're going to do what we think is right, not what the market thinks is right. Whether they think one way or the other would be a bit of a change of scenery from the Fed. So yeah, as I said, I don't think they have it in them to not go and cut interest rates, and then Donald Trump's coming in. I probably want to cut for him and stuff. Yeah, I think it's a bit of a nonsense conversation. Personally, I think they will go and cut interest rates, and I guess we'll have to see where it all ends up in back end of this year. So I still do think stocks push higher, and this now gives us levels to buy back into it. Donald Trump seemingly wants to relax rules and regulations around self-driving cars, which is why Tesla shares were up overnight. That's why the Nasdaq was up overnight, having a bit of a pullback back down the other way. And I was pretty surprised if they retraced all the post-election gains. It's surprising that they would gain at that sort of aggression and then just completely reverse the move when the Fed have been like, we're not too sure about interest rate cuts. But um, yeah, I still do think they'll cut, and probably just provides us better levels to go and buy back into. So that's where I'm thinking over the course of this week. Do you buy right now? No, you got to wait for some sort of bottom to form and some sort of turnaround. You are at a pretty good level on the S&P 500, so it'll be interesting to see if this holds. The level we were looking at last week, if this kind of zone really across here, if that kind of holds, then I mean, you might get a little double bottom or whatever sort of technical analysis you're into. But if this holds and starts to push back higher, you probably make an attempt back up towards 6,000 at least. So I think that definitely provides us with a bit of entertainment over the course of this week. US dollar. Right, dollar yen kind of coming off that trend line, looking like it wants to push back higher. You're still going to be bullish on on the US dollar, especially if they decide not to cut interest rates, right? If they start to go completely wind back in interest rate cuts, that makes stocks a more difficult trade. But certainly the US dollar trade still goes, and the US dollar still goes higher in that case. So pretty clear direction last week across the US dollar. Continue to be long the US dollar. And if you're long the US dollar and you're long stocks, I think either one of them win or both of them win. So it's not a bad way to play it. I think this week try and be long both. If you lose a trade on stocks, you should probably win a trade on the US dollar. But bond yields is an interesting one. Keep an eye on this 10-year yield over the course of this week. Hasn't been up this high since July, up at 4.5%. 10-year yield continues to rise. Right, that is kind of the market's way of showing us that interest rates may not be going as low as low as they first thought, which is no surprise because they always overcook those things. But how high this goes is another question. I mean, the higher that goes, the worse it is for stocks. So that's also something we gotta keep in mind. So like in the short term, the trade on stocks is maybe a little bit more shaky with with bond yields pushing higher, with somewhat of a reluctance to cut interest rates, with the US dollar pushing higher. It's not the perfect situation for stocks. I still do think you look to buy back into them, but certainly from the US dollar's point of view, if they are winding back expectations on interest rate cuts, the 10-year yield continues to rise, 2-year yield continues to rise. That's just straight up positive for the dollar. So if this continues, bit of an easier trade in the dollar. But again, I still think you got to look at those stocks with a keen eye. But maybe US dollar slightly better trade for this week. But not much has changed from a market point of view in terms of what we're looking at. Yeah, you got to continue to look at US related assets. Bitcoin's another one. Bitcoin up at these highs. Does it continue or does it reverse? Probably due a bit of correction now at this point. Has really since kind of late August, it's increased by like 50%, nearly 50% in value. So probably is due a bit of a pullback. Whether that happens this week or not is another thing. It's also been interesting. It's been ripping higher at that pace against the US dollar when the US dollar's been strong. So interesting one when it comes to Bitcoin. Do you want to keep buying up here at these highs? No, absolutely not. A bit too high to go and buy into. I mean, I was talking to somebody over the weekend that was looking at buying Bitcoin, and I was like, it's a bad idea when people start wanting to buy these things when they're up overstretched at all time highs. It's not a good thing. Um, but anyways, yeah, US dollar, US stocks, main focus of attention this week. They have to be. Economic data is pretty light. You've got inflation out of the UK on Wednesday, expected to tick higher by 0.5% up to 2.2, but the central bank have expected that. They've communicated that to us ahead of time that that's likely to happen. So it's no real surprise to markets when it does happen on Wednesday. A rise in inflation. Be interesting to see what a Labour government will do with that. I'm not so sure they're certainly on social media they're not being looked at in a positive light at the minute. If you're keeping an eye on social media, obviously nothing has been confirmed yet, but if what's on social media is to be confirmed, that could be curtains for the government. But I'm not going to talk about that while I'm being recorded. You can go do your own research and you'll find it pretty quickly. Um, you might get arrested if you look too hard, but anyways, yeah. Other things, something to note this week. Trump is going to pick his Treasury Secretary. Who he picks is another question. There's a few names in the hat. Let's see what he has to say. Markets will look at that. Will it be market moving? I would hazard a guess, probably not, but is a possibility. So we'll see how markets react off the back of that. It's not something that I will look to actively trade or take a trade off the back of. It'd just be interesting to see how markets react to his choice. But U.S. assets have to stay in focus. U.S. dollar, U.S. stocks, U.S. bonds. That's where the focus is at the minute. Has been for the last 2 weeks. It certainly is over the course of this week. So, anyways, best to look out there, folks. Let's look in the markets and see what's going on. We'll update further as we get on through the week. And yeah, have a good week, everyone.